Yeah, I saw somebody make a comment about this, and I thought it was interesting. A good one to talk to you about is we're now starting to see the Mag 7 actually doing capital investment, right? Which they've never done.
Yeah.
They just bought their own shares back. Is that a net negative or positive in their performance? Economic performance is probably good because capital investment was something we'd been missing for 2 decades, but no share buybacks or less share
Yeah.
buybacks. Or does it still generate even more free cash flow that they end up just doing both?
Yeah. Well, I think it's highlighting two trends. One is they didn't do a Capex, but they did R&D, which until recently was a P&L expense, not a capitalized expense. And so they're supplanting those dollars for capital dollars that become balance sheet assets. In a world of labor shortage, that means you have less OPEX because that's wages, but you'll have more balance sheet intensity because now you have a computer that you're operating. So I think in a world of labor shortage, balance sheet intensity will go up. So it makes sense that these companies are big spenders of CapEx now. But that does create another wave of innovation because cooling and power supply and uninterrupted power and all these become strategic advantages, which will create another wave of technology innovation. So I think that there's a lot of opportunity and waves of opportunity being created because of that change that you've just highlighted.
Yeah, I think you're right, because it's going to be a game of efficiencies because the cost of these models is going down fast, and the compute is going down, but therefore they can increase output. So it's just this tremendous race to get more efficient at every single component part of that flywheel, from energy to chips to compute.
Yes. And we've even seen it in the financial industry. The financial industry used to trade labor intensive, so had a lot of traders and people. And then they replaced all the traders with computers. But someone naively might have said, well, then financial companies' CapEx will go down because they already have computers trading for them. No, CapEx intensity and tech intensity of the banks has actually only gone up since then. So that arms race, without even AI, is consuming more dollars. And that's, of course, I think going to be the case with AI itself.
Putting your stock picking hat on, how do you pick through what is going to win in the next few years? Because yeah, sure, we can, sure, Microsoft will do fine, et cetera, but how do we make money out of this? And it's not very clear yet with AI, outside of Nvidia and a few other stocks, how to really make money out of this, out of robotics. A lot of these kind of exponential age technologies, pretty tricky because not much around. There's pretty slim pickings because there's been no IPO market for bloody forever.
I've got two simple analogies to share that I think we should be looking for in AI. So we just published a study looking at the wireless fiber boom and when the stocks peaked relative to capital spending. And many people, so let's say it was a 20-year CapEx cycle for fiber and wireless. The stocks relative to the broad market peaked 8 years into the cycle. So in other words, like halfway into the cycle, the market will suddenly say enough capital has flowed into the space that they're market performers. However, in that now in retrospect, the 25-year look back, one industry in wireless pulled away from everything. Two did. The first one is the tower industry. It has produced better returns than handset, chips, carriers, spectrum owners, the towers, and it's, as you know, it's a boring business that grows in a unit with demand. The second, of course, was Apple came along, but in 2007, so 13 years into the industry and after the industry's stocks all peaked, Apple came in and essentially gobbled up the economics of the ecosystem. So I think that in AI, it'll pay to look for the tower equivalent and the next iOS that'll come out on top of everything. But I think the second thing that's going to be important is that you just described it. AI is infinite workers with PhD qualifications.
Today.
Today.
Don't forget, in 2 years' time,
Yeah, it'll be super intelligent, right?
super intelligence. So something we've never had before.
Correct. And yet these super intelligent entities have to eat pizza. And what I mean by that is like the best performing stock in the last 25 years is Domino's Pizza because everybody has to eat. So if you could find the pizza of the AI worker, so that's not the infrastructure, it's what you have to feed the worker, that's another moneymaker. And I don't know what that is going to be.
So I've got two thoughts on that. Obviously, one is the energy flywheel, right? If you're feeding AI, it's going to be probably something to do with the energy mix and how that's delivered and what. And I don't know, again, because the energy grid is going to get reconstructed and changed anyway. The other one that I've come up with is we are so digital now. We're going to become more digital. Our roles in whatever a workforce is or the economy is going to change. But tomorrow will be more digital than today. That is a fact, and that is not going to stop for the rest of our lifetimes. So it's going to cause an equal and opposite reaction. Somewhere within this, tangible experiences become premium experiences. And, if you look at the rise of LVMH, there's something in that story which is equivalent to your pizza, but the luxury pizza. Somewhere within this is going to be an equal and opposite story that's going to be immensely valuable to us as humans.
The thing that is the most non-fungible,
That's
like
right.
the most,
That's exactly right.
Yeah, that's a good point because you're right. We're going to be polluting and corroding so many human experiences, especially like with android robots and fake friendships and things that get really polluted.
Well, look, Tom, we do this now. We're so used to doing this on Zoom. Go back 10 years, you and I would have had to have met at an event or whatever.
Yeah.
And those experiences matter because they actually form true relationships and stuff, and you don't do it this way otherwise.
Yeah. In fact, I don't know if you know this. Someone did an experiment, and you should just check this out. Whenever people shake hands, okay, and the research study this, you 100% of the time end up smelling your hands because you're trying to detect the
pheromones
of someone else, but you don't realize you're doing it. And they said that so it's still instinctual that we need to meet in person.
Yeah, because pheromone exchange is what we do, and we don't realize it because we see dogs do that and cats do that. We don't realize that we do.
Yeah,
but we do. Tom, I know you need to get out of here, but listen, fabulous conversation. I think there's a lot more we can talk about because we didn't really cover much of the future and where it's going. But I just think it's also very important to hear the past because people don't know why you make decisions that you make or why you have the understanding that you have until they understand where you came from. So thank you for sharing that as well. And I look forward to getting together again at some point soon.
Yeah, that'd be great. And probably in person next time, right?
Absolutely, my friend.
Okay.
Take care.
Take care.